All right, all right, all right. Good morning. And while you're focused and you have your hand on your keyboard, do me a favor, subscribe and hit the bell. Hit the like, it goes a long way. I'll be running directional trades because we got volatility in that market. So you could join me at trading at off. Wait, that's at trading underscore off. On Twitter, and I'll be calling out my trades. At least doing that until I can get my stream up and running. So January is about the pain. The pain. Yesterday was fucking brutal. Excuse the F word. Um, so just hang in on your longs. If you're not leveraged out, you should be all right. You'll get through this. We're down 15 right now. I think I saw it high as much as 30 yesterday. But here's the issue right now, man. I think it was Netflix didn't drag down the market. I don't think anybody wanted to stay in the market over the weekend worrying about Russia, 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 Russia. And you ask me, this is just a ploy to get Putin out of office, or at least ensure that the Republicans dominate the House and dominate Congress and just beat the crap out of Putin, beat the crap out of Biden rather. That's what I truly think. I don't know. I don't think it's a good idea that Russia move on Ukraine. For him, I don't. It seems unsettling for his economy. Everything I've looked at doesn't seem like it's a move he wants to make or should make. But it doesn't mean he's not going to make it. So anyway, that fear is out there, man, and that's weighing on the market. Obviously, there's no confidence in the market, and that's what's going on right now. There's no confidence. So we're going to have to see a fairly decent move to the upside to get something going on. And normally these are quiet days before Fed, but I don't know if we could bank on quiet days before Fed right now. And every time I say it's going to be quiet, we take a beating like this. There's nothing else really. Stock sank ahead of big tech earnings. Maybe people will buy into it. I don't know. They're talking about supply chain. It's just a bevy of bad news. And last but not least, let's see what we're looking at. We got the market, but I don't think any of this is going to really be that market moving. To tell you the truth, I mean, are we banking on bad news right now? So the Feds calm down. I think Wednesday is going to give people some insight, get some understanding. I think this is oversold really into what's going on with interest rates and things like that. And then after taking such a big beating all week, I don't think hedge funds were willing to carry the risk of what was going on in the market, or what was going on over in Ukraine. So they weren't going to carry that risk over the weekend. I think that's what transpired on Friday. And then we have oil, obviously, on Wednesday. And here it is, the Fed decision, the Fed conference on Wednesday. So I don't know, maybe 2 more days of pain. Let's just look at some technicals. So here we're looking at the ES, and it looks like a bear flag is building on the 60-minute. Yeah, this wick to the downside is a little cheesy. You don't want to see that. You want to see a strong bar down. You want to see it close down, and then a little consolidation, then a break. So it's not the greatest bear flag, but what we have here is we're getting a divergence on the 60-minute, and that's pretty good. But for that divergence to trigger, we're going to have to break above the highs of 42.28, and this is on the futures. So one does not know. 30-minute looks like it's rolling around a little bit. It's hard to tell, man. It's hard to tell. may come down a little bit more. That's not even a little bit. Got another 70 points right there before we hit the 50 EMA. So we just got to keep eye on that and see what happens. This is setting up like a bear flag. Oh, that's the weekly. Okay, that's why it looks so aggressive. Let's get to the daily. All right, so we're kind of we broke below it, but we're flirting with it today. And we're just kind of rising on that. It's having a hard time. I don't really like it, man. 382. We're still below it. We're right on it right now. So we poked under it. We pushed back up. Normally, when there's momentum and energy in the market, I would say, okay, it doesn't look good that we poked through and then retraced automatically. But the momentum's to the downside, so I don't like the fact that we breached it. The daily looks pretty aggressive. So because of the divergence, I'd have to say that I'm neutral with a bearish bias. So I'm going to be watching for those bearish trades. And let me see if I can get an idea of if this is oversold, because that's going to tell me. I'm on another screen right now. Bring that back down here. Yeah, we're not even oversold. We went oversold yesterday and the day prior. But right now, I mean, we're oversold. We went extremely oversold yesterday and the day prior. Now we're just mildly oversold. The 60-minute went extremely oversold. And again, it's building this divergence, which that's encouraging. But we'll have to see when the market opens. It could gain energy. There's really not a lot of volume in the futures at these hours, like before 8 o'clock. So that could cause that momentum to work its way back. And we went extremely oversold on the 30, but we got this divergence. We'll just have to see when the market opens what it's going to do. I mean, I'm not expecting any powerhouse retrace today because there's really nothing to motivate it. It's in everybody's best interest to just chill and wait for the Fed. Hopefully, if there's light volume, this will just float up a little bit, give us a little reprieve from this push down, and maybe turn this momentum on the daily. And that's really what we need. When we go back to the S&P, let's take a look at that. See if we can anticipate some sort of pattern. That head and shoulders was classic. Oh, screwed up. And yeah, if we hold to that head and shoulders theory, we had said that the market's good for like 43.26. I don't think much has changed. Looks like we're going to end up hitting that. Where do we close at? 43.97. Man, oh man, oh man, oh man. 48.18 last week. So yeah, this. I mean, the momentum is just ugly. Look at that. That's just powerful down. There's just nothing there. I mean, the only saving grace adding to our anticipation or hope that we return is 1, 2, 3, 4, 5, 6. 6 days down. I mean, we got these mild retraces within the days and then turned around and tanked. So that could be the reset right there. But I don't know. We going for a 7th down day? Oh, the humanity. So that's it, man. That's really what's going on. We're going to call today a neutral with a bearish bias. I know yesterday was very aggressive on the sell-off, but looking at those futures, that would roll me to a neutral. It looks like something might be working to try to put in a bottom. So that's what we're going to have to call it. This is the ES again, and I'm looking at the 15, and here's the 60, and here's the daily. So again, we have this trend down, this slope. if you will. I'm going to not worry about that outlier right there. And I'm going to say that this is the trend that I would be following. Yeah, this is a little outlier. And look, we have this momentum moving up on the Mac Daddy. So that's a divergence right there. That's a classic divergence. What we need this thing to do is put in another low and then break. And this break won't be valid until it breaks above this high of 44.27. I don't know what that translates. I don't know what the difference is in the futures at the moment. But I can't seem to find that pattern. And actually, I'm just doing this so that you guys get a general idea of how I look at the market. But yeah, when you just look at the straight up futures, man, it's just ugly, man. It's just the U.S. market. If you look at the S&P 500, it's just there's no glimmer of hope in this bad boy. So that's it. If we remain fearful, the market will drag down. I mean, margin calls, all that shit. So we'll have to see. We'll have to see. We're going to open up down around 15 points right now, to the best of my guesstimation. Oh wait, did that bad boy come back? Yeah, it looks like it might be coming back a little bit. All right, it'd be cool if we open up flat, and then we can get a good feel for which way. At least it'll open up a trade for us. Oh no, there's a difference in that. All right, we're down about 10. It would be cool. Oh, we're down about 6 now. Be cool if we opened up flat, and then we'll probably find a good trade right at the open. So if you want to trade that with me, or watch what I do, or listen to what I do, follow along on your charts, check me out at Twitter. It's at trading_off. And do me a favor, man. Subscribe and hit the bell so you can be a part of this every day. And hit the like, because I appreciate it. Any contributions go a long way. Any support we get from the public goes a long way to help building the channel, help getting things going, outfit the boat for some streaming while off the grid. So I appreciate the help. Everybody, remember, in the face of this house of pain, be calm, be cool, and be at peace when you trade. And good luck trading.